You've probably heard traders talking about making 10% a month and thought, is that even possible? Is it just a fantasy? Well, today we're going to break down a model that actually aims for exactly that. And you know what? The secret behind it all? It's all about mastering risk. Welcome to AI Explains ICT. In this video, we are diving deep into the core content from ICT, specifically Month 2, Episode 3, to really unpack a powerful concept for trying to get those consistent returns. So, that big number, 10% a month, is that really sustainable? Well, according to ICT, the path to that kind of return doesn't involve taking these massive, scary risks. No, it's actually built on something completely different, and we're going to see it play out in a really specific case study. So let's get right into it. We're going to focus on just one trade setup in the Aussie dollar, and this one example has literally every element of the strategy, from that bird's eye view all the way down to the nitty-gritty execution. Okay, so it all starts on a higher time frame, right? You got to look at the big picture, like this daily chart. The whole key here is to figure out where the big money, the institutions, are likely to push the market. ICT points out these pools of buy stops. You can think of them like magnets for price, areas of liquidity that the market is just drawn to. The entire foundation for this trade is this daily bullish order block, a level where we expect the big players to step in and show their hand. And this high-level analysis tells us the potential here. We're talking about a move of around 100 pips. That's our big long-term target. But hold on, we don't just jump in right here and hope for the best. And this is where the magic happens. We switch from that big daily chart and zoom all the way into a 5-minute chart. This is so key. Why? Because it lets us slash our risk. We can define our stop loss to under 10 pips while we're still shooting for that huge 100-pip target. See the power in that? All right, so this brings us to the real core lesson here. The secret to getting 10% a month isn't some magic indicator or a hidden pattern. It's all about how you think about and manage your risk. You know, most traders think you have to risk big to win big. It kind of makes sense on the surface. But ICT argues the absolute opposite. Real, sustained profitability, it gets unlocked when you take small, super well-defined risks on trades that have a high probability of working out. That right there, that's the whole paradigm shift. Okay, so to really get how this works with your money, we've got to talk about the reward to risk multiple, or what we just call R. It's pretty simple, actually. If you risk $1 and your target would make you $3, that's a 3R trade. And when you have a tiny little stop loss, hitting these really high R multiples becomes way easier. So you've got this awesome low-risk entry, and you have this huge potential target. How do you actually manage the trade? Well, ICT lays out this super simple 2-part plan to both pay yourself and let your winners run. It's really just 2 steps. Step 1, you secure your profit. You're going to take half of your trade off the table at a 3-to-1 reward to risk multiple. This is you paying yourself. Then, step 2, you let it run. You let that other half of the position just go for it, aiming for those bigger, higher time frame targets. Let's apply this so it makes sense. Imagine you risk 2% of your account on this trade. At that 3R profit target, you close half the position, that's 1% of your account's worth. Well, that half has now earned 3 times what it risked, so you've just banked a 3% gain on your total account. And the best part? You still have the other half of the trade running, and it's now essentially risk-free. Now, you'll hear some traders argue against taking partial profits. They think it limits your upside. But ICT sees it totally differently. Paying yourself when the market gives you a nice profit, that's a sign of strength. It takes away all that emotional stress and lets you manage the rest of the trade from a position of power, not fear. It's a game changer. Okay, this is where it gets really fun. Let's see how this all builds up over time. Because the numbers, they really don't lie. Let's look at the incredible power of compounding these structured wins. Check this out. This calculator here shows what happens if you only ever do step 1. That's it. By just risking 1% to make 3% just once a week, you're already up over 12% in a single month. That 10% goal we talked about, it's already been smashed with just the first part of the strategy. I mean, that's already incredible, right? But it leads to the really obvious question. What on earth happens when that second half, the runner, starts hitting those bigger targets we were talking about. And this is where things get absolutely explosive. Just look at this. The chart on the left, that shows your returns when your runner nets you 50 pips. But on the right, that's 100 pips. The difference in the compounded return on your investment, it is just staggering. To put that into perspective for you, hitting a 50 pip target on that second half of the trade adds another 21% to your monthly return. Hitting the full 100 pips, that adds over 46%. And let's not forget, this is all happening on a portion of the trade that is now completely risk-free. It's pure profit potential. And hey, if a 10 pip stop seems a little too tight for your style, don't even worry about it. Even if you use a wider 20 pip stop, the principle stays exactly the same. A 50 pip target can still generate over 10% a month from that runner alone. The logic here is just solid. So, what does a consistent 10% a month, compounded over an entire year, actually look like? Well, it looks like over 313%. That is the kind of potential that gets unlocked when you stop chasing home runs and instead focus on small risk and a smart, structured profit plan. Ultimately, this whole model is about taking back control. It's about empowerment. Because like ICT says, at the end of the day, you are going to watch your own money better than anyone else ever will. This approach gives you the framework to do just that. So this leaves us with one final crucial thought to chew on. So many traders spend all their time hunting for the perfect, flawless entry. But what if the key to profitability was never about the entry in the first place? What if it has always been about mastering your risk? And that is our breakdown. Hey, if this video helped you out, please, I am begging you, do us a huge favor and smash that like button. It seriously helps us out more than you know. And make sure you subscribe so you don't miss the next video. And if you have any questions at all, drop them down in the comments below. A real human will get back to you, we promise. Thanks so much for watching. Safe trading.